Welcome back to Stocking Stocks. In today's video, we'll be exploring one of the most essential skills for any trader or investor: understanding stock charts. By the end of this video, you'll know how to read different types of charts and extract valuable insights from them. Let's jump right in. What do stock charts represent? So, what exactly is a stock chart? A stock chart is a visual representation of a stock's price movement over a specific period. It helps traders and investors track trends, analyze patterns, and make informed decisions about when to buy or sell. On the chart, the vertical axis shows the price, while the horizontal axis represents time. Each data point on the chart corresponds to the stock's price at a specific time interval, like daily, weekly, or even minute by minute. Charts are powerful because they make complex price movements easy to visualize and analyze. Types of stock charts. Now let's talk about the three most common types of stock charts: line charts, bar charts, and candlestick charts. First, we have the line chart. This is the most basic type of chart, showing the stock's closing prices connected by a line. It's great for spotting overall trends, but doesn't provide much detail about intraday price movements. Next, the bar chart. This chart shows more information, including the stock's opening price, closing price, high and low for a specific period. Each vertical bar represents the price range, with small horizontal ticks showing the open and close. Finally, the most popular choice among traders: the candlestick chart. It's similar to a bar chart, but visually easier to interpret. Each candlestick tells a story about price action within a specific time frame. Let's break down a candlestick into its components. Each candlestick has three main parts: the body, the wick or shadow, and the color. The body represents the price range between the open and close. A green or white body indicates the price closed higher than it opened, while a red or black body means the price closed lower. The wicks show the highest and lowest prices during the time period. They help traders understand the full range of price movement. A bullish candlestick, green, signals upward movement, while a bearish candlestick, red, signals downward movement. These tiny details can tell you a lot about market sentiment. Now let's talk about time frames. Stock charts can be viewed over various periods, from 1-minute intraday charts to long-term weekly or monthly charts. Shorter time frames are useful for day trading and scalping, while longer time frames are ideal for swing trading or investing. For instance, a daily chart might show an uptrend, but a weekly chart could reveal a larger downtrend. Always consider the bigger picture when analyzing charts. Let's put it all together with a real-life example. Here's a candlestick chart for Tesla. Notice how the green candles indicate upward momentum and the red candles show declines. By identifying key levels, such as recent highs and lows, you can start spotting potential trading opportunities. With practice, you'll be able to interpret these charts like a pro and make more informed trading decisions. That's all for today's video on stock charts. In the next video, we'll dive deeper into candlestick patterns and how to use them to predict market movements. Don't forget to like, subscribe, and hit the bell icon so you don't miss out. Thanks for watching, and I'll see you in the next one.